Good morning, listeners, and welcome to the Trade Talk podcast. For the day, we need to see that whether the market breaks 15,800 or not, because there we are seeing a lot of call writing. At the same time, 15,700 is acting as major support for the market, and yesterday also when the market was down, it recovered from lower levels and it closed very close to 15,750, 760 levels. But while looking at the activity of last 3 days, market is managing to register new high on a daily basis, and that will keep the momentum high. In fact, broad base activity was very strong. The market breadth was very strong as compared to last few days, and we saw a number of stocks very close to their circuit filters. It is also a little bit scary because whenever there is activity in mid cap and small cap stocks, other than large cap companies, that time we see some euphoric sort of activity in the market, and that actually not positive for the market. Bank Nifty was also in the range, and it opened at higher levels, but again it closed around the same levels. That during the day the activity was completely flat. It remained within the range of just 250 points, and that is why today we are expecting maximum activity out of banks or financial stocks. So today we are going to focus on bank Nifty, bank stocks, financial stocks especially. And for Nifty, as we mentioned, 15,800 would be major resistance. In fact, if we see any higher opening or close to those levels, then there we should look for taking some profit on long positions, or even we should look for creating some short positions. On the downside, 15,700, and below that 15,600 and 550 would be the next important support area. Sector specific, we saw activity in technology companies and power companies. Power stocks did extremely well. Tata Power, Power Grid, as well as CAC closed at the highest point of the day, which is also indicating us that the broader momentum or the economy is really doing well, and that is why all these power companies are showing such a massive strength. So broader or long-term trend of the market is still intact, but in the short term, because we have moved to the extreme levels, I think we may see some correction in the short term. That's the view. Even if we go through with FIS data, then they are adding call options as well as index futures, but at the same time they have huge positions on put option side, and that means they are like completely hedged, and they have reduced their positions on stock futures substantially, so which is little bit unusual, and we need to see this particular event very closely for this expiry, that how actually this particular expiry spans out. Finally, for retailers, they are grossly long on all the segments, and that is why it shows that retailers are leading the rally. And finally, for the day, we are again going to concentrate on technology, and technology on the higher side, and maybe financials on the downside. That's the overall view that we can say. For commodities, there is no follow-up buying. Yesterday also there was higher opening, but again they close at the lowest point of the day. Globally, if we see the market, then there also we are not seeing any major activity, and it is completely under mixed sentiment or mixed news flow. Crude oil was around 71.50 levels. From there now it is reacting. It is again trading at 70.50 levels. Bond yield was around 1.60 in the previous week. Currently it is at 1.5756, and other commodities which are like in the range, and they are not able to cross their previous highs. So it shows that it's a mixed reaction, and the market has taken a pause, so it is consolidating, and we may see some sideways activity for next few more days. That's all from my side. With this, I'm ending today's morning podcast, and thank you very much for listening in. Have a great day to all of you.